I got a bunch of content from years of doing this stuff. So I'm gonna repackage it and offer it in an easier way and like edit some of the videos and stuff like that. So, be looking out for that. But like I said, we got short-term highs here, here, and here on US 30, NAS, and SPX. And I believe that'll be our target that we look to aim for next week. But also still consider, even if we do come into this imbalance, even if we take out this short-term high, we're taking it out into this imbalance right here on each one. So though we may take this and take out this short-term high, which will be the target that I'm looking for, this is the buyer side liquidity from the daily time frame, right? From here, which is what I'll be looking at as to breach. And what's the high on that? That is 3948.2 SPX. That's what our buyer side liquidity is on the daily time frame. So we're going to keep an eye on here. Keep blue. Same thing happening over here on NAS. We got our buyer side liquidity here. And the high on that is 12,227.8. 8. Same thing, buyer side here. So that's what we're going to be looking for into the week. And then on US 30 here. High on that candle is 31.85 flat. Oops. $31.85 flat. And that's our buyer side liquidity. That's the highest probability target that we go for as far as smart money goes. This is our highest probability right here. We have seller side liquidity here on the daily. Don't think we're gonna come back down there anytime yet. And then on the lower time frame, there's some short-term liquidity here for the seller side, which I don't think we need to come back to because this just created an order block to the downside right here. So this move that we had on each, hold on 1 second. Hey. Okay. All right. Be right back. Sorry about that. Okay. Whew. Okay. So if we, like I said, if we're looking at this, we do have some seller side liquidity that we can go after. But I think because we already dipped down and held this, we press up above and trade up for this target. So this will be the point of interest for me. And then everything on the lower time frames and above from the daily on down, it's kind of showing upward movement anyway. Everything is showing that it wants to push up to that target of the daily imbalance and take out that daily high. We haven't had any real signs of it showing you that it want to push down yet. But knowing what we have coming into the week, let's pull that up. Forex Factory. Knowing we have coming into the week, we have Monday seems pretty clean. Tuesday seems pretty clean. But then Wednesday, this right here, CPI, inflation mark. That's the inflation measure right here. So going into Wednesday, that's our inflation measurement, and that's going to be what we likely see as our mover for the week. And going into the week, all right, there we go. All right, just pull it. It's hot in here. Going into the week, this will probably be the biggest mover for the week. Don't see anything Thursday. PPI, core CPI, core PPI, and unemployment claims Thursday, Friday, retail sales. Yeah, might give us something. And then, you know, of course, the week after that, we have FOMC and interest rate release. So they are going with a possible 75 basis point move again. So I think they pricing that in. That could probably be why they pushing the markets up to send us down from there. That's kind of what I'm thinking is we just going up because they know that they got to take it down when the interest rate is released. But let me send y'all this chart again, if you don't have it already. Daily each. I did a session last week, or at one of these days, I did a session about reading the COT report, and a lot of people got a lot of good info out of this COT report, and I'm going to show you. I'm going to show you some things that are also pointing at this movement to the upside. The outlook. I heard that Elon pulled out of the Twitter deal. Do you think that have negative effect? Yeah, I'm sure it will, but will it be like largely impactful? I don't know. I don't think so. But it's definitely gonna make some moves for Twitter itself for sure. And I mean, after all the news, we kind of saw this was gonna happen. But bar chart.
Sorry.
Yep.
Quick question. Which day is that they're gonna do the interest rates?
July 27th.
27. Oh, okay, that's 2 weeks. Okay.
Yeah, no problem. Another big thing to look out for is Google's about to split. So, you know, that's another good thing you might want to keep on the radar too. They're going to do a 20-to-1 split, I think.
Yes, on the 15th.
15. Yep. So keep that in mind as well. Full chart. So we're gonna look at the COT report again. I'm not gonna teach it, but I'm just gonna go over it, right? Go over what I'm seeing out of this report. Again, the red is the red is the institutions, the green is the, just go back because sometimes I be forgetting. Green is large. Okay. Red is institutional orders. Green is like hedge funds, commercial hedge fund people like that can, and large traders that can make the market move. And then the blue is the retail, right? Going into this last 5 year period, right? Look at where we are as far as orders. So the institutions have let up on their buying starting this year, right? The flat line is 0, right? So this is our 0 marker right here. This is the first time that they've started adding this many buy orders to the buy side, and they started doing this in July since 2020. So keep that in mind. That's another reason for my logic that they are going to be looking to push the market up a little higher, at least for short term or for a period, right? So if you look at this line, the red line, you can see they haven't been above 0 since, well, largely this high above 0 since 2020. And the last time was December 2020, right? The whole year 2021, they didn't really add on positions, right? They didn't really add on buy position. They actually were scaling out, which implies that these mofos bought down here and bought around here. These mofos was buying around here, and they knew that they were going to take the market up. So all they did after that was take profit, take profit, take profit, take profit, take profit, take profit. And us in the hedge funds were buying, 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 buying. And then now they stopped buying, and they started back buying over here. As they took this down, they started to buy again. Then they stopped buying after they took profit over here. Then they let it fall, and now they're buying again, right? They started buying again. But this in particular is important because this is the first time we've added on, the institutions have added on this much since this time frame. So, and in recent, over the past 3 months, right? Over the past couple of weeks, we were like, if we look back here on the 13th of June, they were net, they were flat, they were below 0 at negative 28,864 orders. Then all of a sudden we go to the 20th, and now we're a net 144,197. They added on the next week, and then they added on the next week. And versus this week versus last week, they added 52,000 orders roughly, which multiply that 100, that's 52 million. So that's what you're looking at when you're thinking about the size that they just added, right? So that's how much they just added into this market, right? So again, that's where this is coming into play, eyeballing this area as a target, right? Not to say that, it's going up just to keep going up. They still got this imbalance and this imbalance, and then this high that they could be targeted, and then maybe they want to take out, so keep that in mind. Also, going into the dollar, you can see we pretty much reached where I thought we would right here on yesterday, on Friday. And also in this move in inverse of EU, where we were sitting around this area, and then that move caused us to get down to our -168 target right here, which again, saw that happening, saw this moving down to this point. Now, do we need to come back into this area from here to here, where we have our imbalance on the daily time frame, which this also lines up with dollar, right? That's our imbalance right here. And I'll just draw it out real quick. It's pretty much our imbalance here. This is the area we'll need to likely come back to, right? And considering where what's going on with dollar, that imbalance lines up with this one for dollar. So, but this one is bullish. So for me, looking into next week, which I'll be starting my funding challenge, maybe, because something just came up, so I might not start it. But going into next week, this will be what we likely see price return to. And if we can hold this, you see we got an old high, which is right around the 50% of this imbalance. So that makes that high probability for price to return there if it does drop. Got a similar look on GU, but GU holding up a little stronger than EU, right? We got a drop, but we already inside of the imbalance on on GU. That's what the difference is on GU versus EU. Both of them drop, but let me just say this as a template. Oops, dang it. Undo. Save as bearish imbalance. All right, so both GU is inside of the imbalance already, unlike EU. EU is at a low. So with GU being in the imbalance already, the question now is, does it fail the imbalance or does it go into this order block or maybe into this little small imbalance right here? Those will be the questions, but that'll all correlate with, whether or not we are going to fall on dollar. So if we fall on dollar, we should have the rise to fill out the rest of this imbalance, trade into this order block, and maybe even go into this little small imbalance right here. So that'll be what we look for on GU. Let me see, GU, EU, and dollar. This one's GU. This one's EU. I would say just match these areas up with your charts, and so that way we all seeing the same thing. And if you ever want to know what I'm thinking, you already know, how I'm looking at things, right? And again, this is a monthly imbalance that we reached up here, monthly imbalance. We haven't been here since like 2008 or 2003. one of those. I don't remember off the top of my head, but it's already there, right? So we got those three. And then, one other one, UCAD. Let me do UCAD real quick. UCAD looking, it's following the dollar, right? And you see, we had this move in play, right? And now that we reached the area I thought we would, right? This medium of 98,326 is where I think we target, right? That's my highest probability target, right? And that's in the middle of this imbalance right here. So with that being the target, I think it's all going to depend on dollar. But as expected, we tried to reject right around the low of this imbalance. We got 1 week, 2 week, 3 week. That's confirming that rejection attempt. And then we traded through it into the imbalance. Now that we're inside of this imbalance, if we hold inside of this imbalance, then we definitely push up to this 98,32.6 target. If we reject like we've started to, then that's when we come down and look to take this area out eventually. But that's all going to depend on dollar, because again, dollar has an imbalance to the upside that's pending. And you can see we got our imbalance on CAD, on not CAD, but on Swiss here to the upside. So this is a bullish imbalance right here, which even if it does fall, this is going to be high probability that we get a bounce or a hold right here. So let's say this too. So I don't have to keep doing that over. All right. Okay. So let me send you guys this one. I'm still liking this. So let's put eyeballs on this area right here. I still like this area for it to come to. We're going to eyeball 98,326. Swiss. Who's first time? Anybody first time on this session before? Can you drop some sevens in the chat? Anybody? Probably not, but just in case, just thought I'd mention it. Sure. Okay, and again, if you don't know, Euro USD moves against dollar, so it does the opposite. GBP USD also moves opposite, but USD Swiss moves in the same direction. So if you want to, if dollar is buying, you need to be buying USD Swiss. If dollar is buying, you need to be selling Euro USD or GBP USD. Okay.
Wow. Wait a minute. I'm trying to write that down. If the DXY is buying, then I need to be buying USD Swiss franc. If the DXY is buying, I need to be selling Euro USD.
Mm-hmm.
Gotcha.
And GBP.
Selling GBP USD.
GBP.
Right, because the DXY is getting stronger, so then the Euro and the GBP would be getting weaker.
Yep. Every pair, so these two pairs have inverse correlation. These two pairs have they correlate, right? So this one, let me just give you Euro USD to UCAD too. UCAD is pretty much, again, this is old projections, right? But we are with dollar, we reached a high. Dollar is at a high. UCAD is at a high. UCAD is inside of it, is bullish imbalance right here. It's going to look a little different, but for the most part, the moves are going to be the same. So like, that's why I like looking at higher time frame. And then just once I understand higher time frame, I can just always go down the lower time frame and get in sync with what's going on higher time frame. That's usually where I'm trying to go, right? So we are inside of this imbalance on UCAD, right? But this is a larger time frame imbalance right here. So if we go to like the weekly, we'll see, right? Actually, we might need to go to the monthly. Let's see. No, weekly. We should probably look at these in two different imbalances. So we got this one. That's here. We got this one. That's here. We already traded through this one. It did leave a little piece down here at the bottom. So maybe this is where it want to hold. But for right now, as dollar is rejecting, we rejecting this high as well on, and this is an old high from May and June. This is the first time we've been this high since 2020 over here. So that correlates with dollar. But again, I think dollar is going to take us higher. So if that's the case, let me show you, right? We got buy side liquidity on the daily as well, just like we did, on, interestingly enough, just like we did on the indices. That's our buy side liquidity on the daily, but I'm just doing it from the monthly. That buy side liquidity rests here at this high right here. And that's where I would like to see us take this. And going into next week, you know, if they do raise the interest rate, it should make dollar stronger. I mean, not if they raise the interest rate. When they raise the interest rate, it'll make dollar stronger. So this all leads into us having the same logical movement, right? So I'll just send this to, we don't need this anymore. But so still say the worst case scenario, we come down here and then our target will be still here. With us already in this downshift, right? This is worst case. We fall off the cliff and we come down into this imbalance, or maybe even this one, but I don't think we go that far. Right? Best case scenario is going into the week, we go ahead and hold this area, and then we start to trade up into primary target, this imbalance. I mean, this buy side liquidity from the monthly right here. So we're gonna eyeball this area right here, and we're gonna watch our holes in this area and really consider this same area as this too, because that's pretty much also, I'll just draw a third line there, because I also think this might be another area we could see it push down to, and we'd still be targeting you. So this is UCAD. Screaming thank you. Strong leading index buys, 2 strong index sales. Yep. So like these right here, between these 5, what is this? 1, 2, 3, 4, 5. 1, 2, 3, 4. And between all of these 4 and then the 3 indices, like we should be good as far as looking for setups, because we know what to expect, right? And of course, anything can happen, but probability based, right? So now that we're done with the charts, one of the things I wanted to go over is I wanted to go over my checklist And what I do in the morning when I'm going over my charts, all right, and going over my setups, right? And this is something that I have like even improved upon as of late, just to make sure that I am being better than I've been. You know, I want to be even better, a better trader. So I'm going to go over two things. Dang it. Go over two things. I'm going to go over my checklist. And then I'm going to go over hold on. I'm going to go over my checklist. Then I'm going to go over my something else. I just say that. Okay. All right. So let me go. So this app right here, like this is how I like manage my life pretty much, right? So I like use this to like keep track of all of the stuff that I have going on, and I try to give it scores and all that kind of stuff, right? So I can keep like everything you don't measure, you can't grow what you don't measure, right? So, you know, I keep that in saying. So as I go throughout my trading day, right? These are the things that I'm checking out for, right? So when I wake up in the morning at 7, 6, 7 something or whatever, this is how I go throughout my day, right? I start off by checking the news, right? And I check on Forex Factory, on my FX book. Then I'm checking for CNBC, Bloomberg news breaks, right? And then, you know, I'm reading over whatever I see is top news or whatever the market moving news or whatnot. Then I check the futures, right? And just what I'm looking for with the futures, I just want to see whether or not we're positive or negative. And if we're positive, how positive are we in reference to where we are on the chart? Are we a little too overbought, or or if we're negative or really negative, are we too oversold in reference to where we are on the chart? If you're super negative and you near like a major support, right? You want to see the futures push up from there, right? Or if you're super positive and you're near a major resistance level, you want to see price push down from there. So you want to see the futures come down off of that. If you're looking for a continuation, you want to see futures increase or decrease. And if you're in a bearish position, right? Then I check my earnings calendar. I always check that because I want to know what is, or if there are any type of big companies reporting, or a combination of big reportings or news releases for earnings of any larger companies, like especially the FANG stocks. Like I want to know what Facebook doing, Amazon, Netflix, and Google. I always want to know what they're doing. So I want to make sure that every morning I know, even if it's not going to be a major impacted player or a major impact stock, I always just want to check and see what's going on. Then I go through my top-down analysis, and I'm checking to see, you know, my setup, look for my entry and exit setups throughout the day. Then I do, this needs to be in a different order. So close out profit, they need to be in a different order. But then I create my hypos, and my hypos are hypothetical things that could happen, right? You know, if this, then that, right? If it goes up and then it goes to a certain area, I'll do that. If it goes down and it goes to a certain area, then I'll do that. Or if it goes to that, if it does something that I don't expect, then I'll do that. So if then statements basically all the way through. And then, you know, I'll come up with my setups or whatnot and go through that, right? And then I just kind of go through, you know, what happened with the trade. Did I close out profit with at least 2 to 20%? Did I break even? Did I take a small loss? Did I take a small gain? Did I take an average loss, average gain, large loss? Or was it a flat day or no trade, right? And I'm doing all this because I want to know that I'm going through step by step certain things. So I don't do anything before I do this. Like it's a structure, right? If I have to know what's going on with the news first, right? And then I'll go throughout. So now that I kind of showed y'all like what my process is, I'm gonna take you to my little template, right? I'm gonna come over here. This is one of my hypos from last week, right? This was Friday, right? So I am looking at that same little checklist I gave you on this little sheet right here, right? So first thing I said I do, I check the news, right? And I combine the news. Let me make this bigger, right? Oh, it don't look cool big. It don't look cool big. I'm gonna put it right here, right? All right, so again, like Friday, right? This was me trading Friday, right? And the news, the biggest thing happened on that day was Japan's prime minister was murdered. I didn't think that was gonna have a large impact on the markets, on the US markets, but I noted it, right? And then we had NFP and FOMC and unemployment rate, right? Going into for CAD. I don't know why I did it. Let me delete that. This was CAD's. What am I talking about? All right. So we had unemployment rate, and I just screenshot this just here, you know, for whatever reason, right? And then I'll just say going in the day, reached a 4-hour bearish fair value gap, which is imbalance high, and over the night tapped the medium threshold. That's what the MT stand for. Almost, we missed it by 10 points. We left equal lows near the medium threshold and swing high at 39.10. Treasury bonds rising ahead of the news cycle. That's just my notes. You don't worry about understanding it, but that's just my notes, right? Going into the futures, right? Down, but mostly flat into the news cycle at about 7:52. The news cycle is referring to 8:30. That's when most of the New York news is released, 8:30. That's what I mean when I say news cycle. So you can see we were 10 points up, 6 points on 10 points on US 30, 6 points down on SPX, and 51 points down on NAS. So pretty much flat, right? Meaning we could go in any direction at that point. And we did actually go in both directions, right? We went down, then we went up on Friday. Then sectors, right? I usually do the sectors. You know, let me see something. I didn't see that. Let's check the sectors. I don't have it on there. All right, whatever. I usually check the sectors, right? And checking the sectors, I will do that, you know, if it's during the week or during the trading hours. But I didn't really look at it that particular day. But you know, that was the case, right? That's usually a normal step, right? Then check the earnings, you know, 18 reporting, but no majors, right? So I just know that for myself, right? Then, you know, here's my top-down analysis, right? The daily chart, I add these into just to get direction initially. I like to know like what, based off of these particular indicators right here and the moving averages, what kind of direction we got going on, but I don't trade off of those, right? I just want to know. So I'll use my RSI MACD just to say, okay, cool. We had a cross to the upside here, cross to the upside there, and we got a moving average cross, right? That means we bullish right here at this very moment. 4-hour, same thing. MACD RSI cross. We had a cross here to the upside, cross here to the upside. That was my last cross. That's all I'm concerned with. What was the last cross? We might have had this happened before, but this was the last one going into my trading day, right? Same thing over here, cross here on the upside, another cross here on the upside, right? On the 1-hour chart, You had a cross to the downside. On the RSI, we flat on the moving averages, cross to the downside on the MACD, which that came into play. And I'll go over that setup too. We flat on the 30-minute, but we got a last cross was to the upside. On the RSI, last cross was to the upside. On the RSI, on the MACD, last cross was to the upside. Then on the 15-minute, last cross was to the upside, upside, upside. On the 5-minute though, we had the last cross was to the downside, downside, and we flat, right? So here was my hypo, my buy hypo. I can see a continuation given that all crosses are pointing up except for the 1 hour and the 5-minute. I said that backwards. I don't know. I think I got dyslexia or something. I don't know. But everything was pointing to the upside except for the 5-minute and the 1 hour. We are in premium on the daily range. That means that we are in, if you take your fibs and measure from high to low of your most recent range, we're near the highs. That's what the premium implies. So premium price means we could likely sell, right? And remember that remember the 5-minute and the 1 hour were showing bearish signs, and we were in a premium on the daily range, and we have rejected a 15-minute order block and a 15-minute fair value gap. We need to hold the 15-minute bullish order block and the 15-minute bearish fair value gap to reject and continue to the upside. And I have alerts at these levels. The last place I would look to see a buy continuation is within the 4-hour bullish fair value gap. Keep that in mind, right? Keep that in mind, right? So that's what this looked like, right? If we continue, I was looking for us to just continue from here. The 15-minute order block I was talking about, this is the 15-minute fair value gap I was talking about, but I didn't draw it, but it's right here. So I had two potential buy orders right here. And then this area going down into 38.68 is the 4-hour fair value gap or imbalance that I was talking about. So looking for buys here at this level, right? Then my sell situations, right? We are at a daily range premium, and we could reject it to the downside from here. The 5-minute and the 1 hour are the only crosses giving that sign as we could not be aggressive. I don't know what I typed out, just typing too fast. But essentially, 5-minute and the 1 hour are the only areas that I was seeing, only crosses from earlier that I showed me that it could go to the downside. And you know, I would be looking on those charts to see if we got a continuation, right? We are at a 15-minute bearish order block and bearish fair value gap, and we're at the daily opening price, and we could easily sell off from here if the news reports are bad, right? So that's kind of what I was looking for, right? 15-minute order block right here, 15-minute imbalance right here, daily opening price right here. 3 areas, and we're in the daily range, which is this high to this low, and we've already rejected right here. So going into this is where I was looking to sell, right? But I was not going to be aggressive, is which I was trying to say, which I didn't quite type out right. But what I was trying to say is I won't be aggressive because the news is about to release. So when I say that, like normally I would just go ahead and put the order in, but with the job numbers about to come out on NFP, I couldn't confidently put that order in, knowing that the news could take me in a whole different direction. And the news was actually positive. We added 370,000 jobs, which was better than expected. I think it was 320, which was they were expecting, and we added 370, which was good news. And you know, and with that being said, we could have just shot up from there, right? But we actually didn't, right? We left So these are the three setups. This was if I sold from this order block slash fair value gap right here. This was going to be the setup. This was if we take this low out, return to near the daily, I'd sell right here. This is a last worst case sell right here. And then I saw the setup for the drop. I had my order ready, but didn't pull the trigger in time because it was just flying, right? But the numbers were actually positive. We're holding a 15-minute order block and fair value gap at the moment. That was us being around here. It was kind of holding right here. I thought it might buy, but then I assumed that if it didn't hold this, it was going to go ahead, bounce, then give us a sell for a continuation, right? This was the cross that came just before the drop, right? On the 5-minute, right? This was with the cross. This happened. This one candle right here just took us all the way out. So I couldn't get in. I thought we were going to get, this was right before the news dropped. Couldn't trade this yet because I didn't know what the numbers were going to be. And then as soon as it was released, it just was a clean, just tank, right? This was that 15-minute hold right here. And then we also had downside cross on the RSI, downside cross on MACD is confirmation. And we even had later on a cross on the moving average. This moving average cross is a little slower than these two. So if you wanted to use this. So this was the actual trade. A good setup. I had to wait for this setup, but I let it come back to around the daily, took the sell from here. And this line right here is, this is the 4-hour gap high right here. And then I sold it from around here and here, up here, and took it down here. So I had 3 entries, the 3 entries right here. And then I just closed out right here because I noticed that this had got to the middle of the fair value gap and it held. And it came to the top and it pretty much held. And then that's where it bought back up to the upside. But I'd already made what I needed to make for this day. So I didn't go for the buy. I just let it go, right? And go ahead about his business. But the buy setup was good, right? And then, goal for today, right? This was the goal that I had for the day. Was I'm very proud of how disciplined I was today. I went through all my steps and got my direction. I have mixed feelings about the wake up. I be struggling waking up in the morning, man, because my wife is a night owl and she be keeping me up, like just playing around because she crazy. So I be having a hard time like getting to sleep. I try to go to sleep at like at least at midnight, worst case. But even at midnight, trying to get up at 6 that ain't easy. And then if you up playing around with your night owl wife and she just want to just be watching movies and snacking and stuff, and hanging out till another 2 o'clock, and you try to get up at 6. So now you only get 4 hours sleep. So I wanted to get up earlier. I woke up within 6-7 a.m. window, but closer to 7 time frame, and was when I actually got up. I followed all my rules and walked through all of my pre-note checklist. That's what was my goal, is to get up on time and get up at 6 a.m. So that's one goal, right? Then my other goal is to be disciplined and follow all my rules and go through my checklist. So I make sure like that I'm writing something positive in there, because a lot of times when we journal, we only journal about the negative stuff, and we need to stop doing that, because as we go back and look over our notes, right? If all we seeing is negative stuff, think of it like this. If you went to somebody looking for advice all the time and all they told you was the bad stuff that you do, would you actually get anything from them? Would you go back to them and try to get advice from them? You wouldn't, right? You would never talk to that person. If everybody went, if you were already struggling with your weight, right, and you went to somebody and all they did was say, "Oh, you fat, you ugly, you this, you that, you that," you're not gonna want to talk to that person, right? So don't write that stuff in your journal. Note it mentally that it exists, right? But write down the stuff that you can do to change what you're not comfortable with, what you're not happy with. If you are a person that's, depressed, don't write about being depressed all the time. Write about the things that you're grateful for. Write about the things that you're happy for, that you are appreciative of, because if all you do is write those things in your journal and your notes, that's going to only lead to you being more of that. If you're undisciplined, don't write about being undisciplined. Write about being disciplined. So you can go back to that and say, I was disciplined on this day. So you remind yourself, like, I do have the ability to do what I'm trying to do. I do have the ability to be, happy and not be depressed, because I have proof. I wrote it down over here on June 30th, 2022. I wrote it on that day that I have the ability to be happy and not be depressed, right? So that's the mindset you got to be in. And then finally, FTMO status, July 11th start date. That's all that is. This is every single day. I literally have, this is what my trading stations look like, right? So I have a bunch of windows, right? These are all my charts right here. Then I have my, I just have this open, but this is my news, and then this is the FX. This is news. This is news. This is Bloomberg. This is Yahoo, count matrix, bar chart, COT, weekends, orders, futures, sectors, and then just other random stuff, right? So I go through all of these basically every single day, and I'm noting this. Then over here on my other screen, right, on 3, this is my setup. This is what I'm trading off of. So when I'm actually trading, this is what I'm trading off of, this screen, right? There's my long-term chart. If I need to go and look back at that, long-term chart, if I need to go back and look at it. Then on my other screen is this. That's on 2. So just like I told you guys, right? I want to see like where that cross is, right? So I'm going to come over here and check my crosses, right? So this is where I'm looking at the crosses. This is the 15-minute chart. 5-minute, I just go, last cross was on the 5-minute, was to the downside. This is 30-minute. Last cross was to the upside right here. This is pretty much flat, but the last one, full cross, was to the upside right here and here. This kind of little mix right here, but this is pretty much flat, but the last clean cross was here to the upside. Then the 1 hour cross was to the downside over here. Clean cross. We had some crosses here, but this last cross was to the downside. Then we flat right here. So this may cross eventually, right? So I'm gonna note that. This is the 4 hour. Last clean cross to the upside. Note that. Then it's the daily. Last clean crosses to the upside. I'm gonna note that, right? So that's how I'm going through. Same thing if I'm use Swiss. I might be trading you Swiss. It's the same setup over here. I just don't have it all. So that's what I'm going through every single day. Every single day. And I don't move to the next step until I got that taken care of, till that's taken care of. Let me see. Let me look in the chat. Marcus just smile. Yeah, I'm gonna say all the joy having talked about a wife. Yeah. Night owl. Yeah. Crystal is. Thank you so much for this, Corey. No, 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 no. What program did you say you use for journal? Like that. That journal app that I talked about. It's called Success Wiz. Let me see. It's free. But there I use the paid version, but you can use the free version too. Let me see. Y'all can see, which screen do y'all see right now? Do y'all see me typing?
Yes.
Okay. So this is what it is right here. Success Wizard. And all that stuff that you just saw is in here too, right? And I can go through all that good stuff, whatever, from my phone or from the app. But it's this, and then it's got like writing cues. So, right, every morning, like you want to start your day, like let's say we go into start my day. This is some of the writing cues it gives you. And in your day, same thing, writing cues or whatnot. And it's helping me. It's helping me out because I have to have structure, and if I don't, I'm just gonna be. I'm really impulsive, and if I don't have structure, I'm gonna just do crazy stuff. So I have to get stuff like that together. And then this over here, this is just a note template. This is the template that I have right here for my hypo and trade setups right here. If y'all want this, I can send it to you if you want, but this is just what I use, How can I send this? Text. Okay. Let's just name it hypo. All right, so here you go. It's just what I use. Oops, hold on. Let me change the format. Some of you guys that don't have Macs won't be able to open this, but now you should. Okay, so I do have the ability to, yep. And then, Lexi, yes, me too. You a night owl too, Lex? Who a night owl on here, man? Khalil, I just sent it. Miss Tate said it's okay, you have to work. Confession periods. Yep. Marcus, yep. Now this is a true example of discipline. Yeah, man. I have have to work on, I had to realize and work on that, man. Like, I am not a very disciplined person. I come off as though I am because I'm really structured, but I might put down every system in the world, but do I follow them to a T? No. I have a lot of systems and a lot of structure, but it still take you to actually follow through with stuff to be disciplined. So yeah.
So in other words, it's do as I say do, not as I do.
Yeah. 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 So anybody got any questions? Any questions?
Lori, I just want to say that's the teacher in us. We're great teachers. We just don't follow our own rules. So
Everybody a good teacher. Everybody's a teacher. But we are not great students.
I got a question, Corey.
What up, man?
Can you kind of go over like real quick, like what you like how you look at like the order blocks and the imbalances and how you use that
Sure.
to set your targets?
For sure, for sure. Okay. So the first thing I want, like every time I teach order blocks, like let me find the chart because it's really not as hard as everybody thinks. It's really not as hard. Is it on this one? Let me switch screens. 3. So let me see. Daily chart on set up, so it's not on this one. All right. It's not on this one. I already drew it out already. I just want to see if I can save myself some time. Actually, hold on. Yeah, let me go here. View photos. Show photos. Trading charts. Okay. Let's get it over here. Okay, so, right, whenever you are looking at order blocks, let me see something. Whenever you're looking at order blocks, and we'll start with bearish order blocks first, right? You're looking at price that's reached a high or multiple highs, right? And then you're looking for that last move to the upside that it tries to make, right? That's going to be the sign that's your order block, right? And you'll know that that's the sign because you'll see that the low of that order block is taken out. After you make the high, you will see the low taken out of that area. That particular low will be the first time that we've seen a low being made or a low being taken out at a high, right? And then you simply looking for, once that low is taken out, that's going to be your shift in market structure. And this little acronym SMH is shift in market structure. I got a minus sign, that means it's negative shift in market structure, right? Once you see that you have made this upside movement with the shift in market structure, you're going to look for a new low to be made. That new low is going to be your sign that we could possibly return to this order block, right? Once you get that low being made, you're looking for a price to just return to that. And when it returns to that, that's your setup, that's your entry. Same way over here. This is when you see liquidity, and then it takes out liquidity and then it rejects. This is just straight up. I got a high, I got an order block. It takes the low out, it creates a new low, and then it goes into the imbalance and the order block, right? This simple diagram right here is how I always look at the market right here. And right, this is how I project where I think highs and lows are going to be, because I know that if I left an order block, I have to return to one, right? If I left an imbalance, I need to go to an imbalance or so. If I leave some type of bearish point of interest, meaning order block, equal highs, equal high, relative high, imbalance, anything of that nature, right? It's some other stuff, but just in general, if I leave a bearish one, I need to go to a bullish one. So if I know I just created an order block here, right, to the downside, this low is likely going to be near, looking to the left at some point, a bullish point of interest right here. And then if it's going to continue to go down from this point, it needs to take this out, this low out that it just created. So it's going to have to create a new bearish point of interest right here. And if it doesn't, that means it's time for us to retrace. But if it retraces, right, it's only likely to retrace to the previous bearish point of interest, which is the order block or the imbalance, right? So I know if I'm leaving this area of supply in the form of an order block, then I come to a bullish point of interest in the form of some other type of point of interest, whatever that may be, and it holds, it can only go to this. Now, if it trades through it, it's still going to have to put in a bullish something right here to get through this at some point. So if it was going to continue, it would have to create a new bullish order block to get through all of this to replace this one, right? But if it doesn't, right, we have our rejection and our continuation to, guess what? Another bullish point of interest to the left somewhere. That's going to either stop this to continue or stop this and put in a new bearish point of interest to continue down, right? Then this is what it looked like on the upside, right? This is what it'll look like on the upside. Same situation, right? Equal highs, we make a low. Last up move is going to be your order block. This is going to be a bullish order block. You will have an imbalance in price, right? That's going to take out this high. That's going to be your shift in market structure right here. Shift in market structure, right? Whenever you have a shift in market structure, you're going to have a high on the upside. You're going to have a high, a low, order block, and an imbalance that takes that out. Once you have that combination, you know that this order block is a potential area we can return to, or this imbalance is a potential area we can return to. And then, same way as I mentioned before, we're going to trade from this bullish point of interest to a bearish point of interest to make our high. If we ever look left somewhere.
When you say order block, is that a candle? Like,
yep.
Is it gonna? It looks like a candle on the chart. It's
a candle or a series of candles. I'm gonna show it to you. I just want to go over the concept first.
Yeah, I'm with you.
Right. So just like before, we just went. We're gonna go from a bullish point of interest to a bearish point of interest, and if we are going to continue up, we'll hold at the bullish point of interest and reject, right? If we're going to continue to the downside, then we'll get a bearish order block put in right here to keep going down. Or we're going to hold this if we're going to keep going up, and we're going to take out this high and find this would be our next bearish point of interest, right? So saying all that, right? Now let's look at it on chart. We don't even need to go to a different time frame because I see them all over the place, right? This series right here is our last series of up candles before we got this move, right? This low, once this low is taken out, that's our bearish shift in market structure right here. And you can look into lower time frames and get way more information that lets you get into this trade sooner than here, because I'm seeing this on the 4 hour, but it's happening sooner on the 5 minute. Same things happen on the 5 minute. We fractal in the market, right? But if we just basing this off of 4 hour, we would have had, this is our order block. You can dwindle this order block down to 2 ways, right? You can look at you can dwindle this order block down in 2 ways, right? This is a bearish order block. You can look at this whole range right here. This whole range right here of these 3 candles right here. We can look at that as our bearish order block, or we can look at this single up candle right here as our order block too. It's the last up candle, but if we see a series of candles like this, understand this, right? This is an order block. This whole area is an order block right here. But on the 4 hour, we just need to consider this one, because on the daily, this is all one candle, these 3 candles right here. So if we go to the daily, look at that same area, you can't really tell right here. But like if I go, let's say, look at the 8 hour chart, right? There's your order block right here. That same area right there, right? So as we go to the smaller time frames, a larger order block is basically going to be a bunch of smaller order blocks put together, right? Same way now, we on the 1 hour, we can break this down into this one candle, right? And we would have got the entry right here, right? But same way, we got, let's go back to the 4 hour. So we got our up move, then we got our sell off, then we got our shift in market structure. That confirms that this is an order block, this area right here. Then, you know, if you want to dice it up, focus on only the high. That's what you would be looking for, this shaded area as your area to sell from next time. Your bullish order block, right? You technically had a high here, a low here, and another high here, right? So you can look at this whole down move, but we'll just focus on this one down candle right here. That's your bullish order block. Right? So we have a high here, a low here, right? Once we see that this last high here and even here gets taken out, which is here, it happens here. This high took out that high. This high took out that high. That confirms this is an order block. And it even confirms this as an order block too. But we'll only focus on this one because that one is pretty much inside of this bigger one right here, right? Now, once we make this high and this high and this high, next time price returns into this area, it rejects each time. 1, 2, 3 major times right here. So now, look at where we are, right? We just reached this order block, right? We just put a down candle in right here. if we're going to continue, this will be the candle that we need to see that if it holds, will it continue to go up? Or if we're going to reject from right here, we've already met the conditions for this to reject. We're pretty much at the middle of the larger order block. Right here is the middle, about right around here is the middle. All right, so if we measure that, all right, the middle is 39.12. The high on this candle is 39.18. So it's rejecting at the middle of the larger order block. You want to focus on the middle and the low if you're looking to sell at a bearish order block.
Is that because it kind of like coincides with the Fibonacci levels?
They do, but not so much that it correlates with that, but it's just the most sensitive area, right? The most sensitive areas on a bearish order block is the middle and the low. I take most of my trades from the middle or the low if I'm taking a sell.
So, all right, one of the reasons why it kind of got me thinking about this is because I actually had like on my chart, right where you have like that order block, like I have that as like, you know, an area to be looking for a sell, or if it breaks the highs to look for a buy. But I know you were saying, I think you were saying in your analysis earlier that you're looking for buys. So I was trying to see like how you look at it to see if
so
I guess to see like why. I mean, I know you were talking about the fundamentals of why you were looking for buys.
yeah.
And I was like kind of like looking at like structure and patterns a little bit, and I was seeing some things that looked like it was giving me bias to sell. So I just kind of want to see what you look at.
So overall, my bias is to the downside, but the fundamental analysis is telling me it could push up.
Mm-hmm.
So technically, we're in a downtrend. Everything's down, right?
Mm-hmm.
And with us being at this order block, absolutely we can sell, right? Us being, even if you look at the fibs, right? I got the fibs on this one, right? We look at the fibs, this high to this low, us coming up, right? Us taking that high out, right? That means we at the 618 on the daily range right here, from here to here. That's the area you would probably sell from, right? But this high right here is what I'm looking at as targeting. That's why I think, because we just basically rebalance price, right? If we look at the daily, most of the times when you see candles do this combination where you see a wick, a engulfing, and another wick, that's a balanced price range, right? When you see that kind of price action, that usually leads to a continuation in whatever direction you see that in.
Mm.
So I'll show you another example of it going in the opposite direction. Let me see if I see it happen anywhere else. Right here, this actually rejected, but they still implied that it needed to go lower, right? You see the wick here, engulf, another wick, and then we continue to go down. Even though this reject, it still implies that from this point, we need to go further.
More downside.
Yeah, that's usually a combination. Then you see it over here, wick to the upside, and balance. This overshot it, right? But overall, it stayed within that range, and then we got upside movement. You got it right here, almost happening right here. Then we got upside movement. You can see it anytime on the chart, right? And who I taught this to? Chin. I taught this to Chin, and he used it a lot. I think he used it more than a lot of people that I know. But he can concur that this is definitely something you want to look out for. It's not set in stone now, but usually when you see this combination of rebalance and redelivery, like this is usually a sign that we go up. Could we reject inside of this? We absolutely could. Absolutely.
But what you were saying earlier with the order blocks and stuff. So if the market was to shift and change directions, you're saying it takes out the high to the left first and then it goes, or it I think I'm a little fuzzy on that part.
Yeah. So we will be looking for a shift in market structure, right? This could technically, this whole area, let me go to the weekly, right? So if we're looking to see whether or not this would be our order block right here. This is the last down candle at this low right here, right?
Mm-hmm.
We already see that it took the high of that candle out on this candle, right? Then we had another candle that went up, right? What happened when it traded down back into this candle is it held at this low and it held at this low. So this already given order block right here that this might hold and go up, right?
Mm-hmm.
And remember, it looks like this on the downside. Looks like this. This is going to be bearish candle. Let me just open it up in the chart. It looks like this, right? So if we take undo, if we take that into consideration, right? Pull this back up. Right now. Okay, just open it all the way. We take this drawing into consideration. While we consider this, right? For a buy, we need to see the last down candle before the move. This looks more along this diagram, right? This is that low right here. This is that low right here. You see it?
Mm-hmm.
And then this is our order block. That will make this candle our order block, right? Now, we haven't taken out these highs. These would correlate with this high right here. But we starting to see this candle already get taken out on a lower time frame, right? So that's why you don't see it on this particular chart. But if we go to the lower time frame, we can start seeing that this is in the process of shaping, right? So if we say go to 4 hour, you start to see it better, right? So if we start in the same area and look at this again, now you can see it a little clearer, right? This low lines up with this low, right? This low lines up with this low, right? We made a high here. That makes this our order block on the 4 hour right here. Scroll over. We put in another order block right here because we made another low. This low lines up with this low because we created a high. Those are our highs right there. Those are equal highs right there. This price action took us up above that. We created a new high that lines up with this high. And we traded to a new bullish area, right? So this high is this high. Look at where we at. It's a little order block right here, right? So we have equal highs that have been made, a low, another lower low, order block. that's low, another lower low, equal highs, right? We had one order block created and another order block created. And then these equal highs got taken out on this impulse right here. And we traded up until we got to a new area of an order block, right? I won't count the wick. I'll just look at the body to body, because that's kind of trashy looking over here. But this is our order block. This high is right here, right? And it lines up with this high. The opening on this is 37.80. The high on this candle is 37.80. Spot on. Rejection, right? But what does it reject to? It goes to, from bearish point of interest here, lower high, to bullish point of interest, lower low, higher low, order block right here. From this point on, this is your order block, this area right here. That's your bullish order block, right? And we got some imbalances in between this, right? And then from this point, we got our higher low. We trade from the higher low. We take out the old lower high. Then from this higher low, we go to a new bearish point of entry. So let's ignore this stuff right here and just focus on higher low right here to where we go up here. That's our higher high, right? If we go left, there is a bearish point of interest right here. This higher high is sitting inside of this imbalance right here. This whole imbalance, and it just hit the low. The imbalance is from this low to this low, and we reject right at the low. So the lower the imbalance looks like this. So if we're looking for a new sell setup, we just went from higher low to high inside of imbalance. We selling at the low. We get this trade set up to take us where? Higher low, imbalance, order block. So even from here, we repeated the cycle again. We went from bullish point of interest, bearish point of interest, bearish point of interest, bullish point of interest, bullish point of interest, bearish point of interest. That's an imbalance right there. Bearish point of interest, bullish point of interest. We're still in the order block. Bullish point of interest, shift to bearish point of interest, order block. And now we stalling, right? This is why I also think that we're going up higher, is because I think that we need to take this high out, because we already putting in potential order blocks right here. And then we go into fill in the rest of this, and we get to the middle. We already got to the low right here. We need to get to the middle. That gives us 39.75 area, right? 39.50 to 39.75 area, right? The high gives us 40 flat, 4,000 flat. But every time, this is a cycle that repeats itself. This was going on, right? That's the cycle that's repeating it over and over and over.
Hey, Corey.
Yep.
Quick question. So when you have
What's
an
up,
order
babe?
block, hey, how's it going?
I saw
So
Mexico. I was like, what?
I know she put the damn default on this thing. Sometimes I'll switch it, sometimes I catch it, sometimes I don't. But when you have an order block like that, of course, like the stop loss goes a little bit on top of that wick. But for it to not respect the order block and for it to be a continuation, what type of time frame do you like for it to close on, or how do you manage getting it for the buy when it doesn't respect the sell?
It's usually you'll see something that looks like this, right? For a continuation and like not seeing it, like looking for something that could not hold, you'll see a situation where you have, this is a continuation block. It's an order block, but it's like just randomly thrown, right? And it's not actually randomly thrown. Is at an area on the lower time frame or on a particular time frame that it could pull from, and maybe it should if it was going to reject to go up, but it fails, right? And you'll see it. Let's go to
watch. Actually, that one that you have right there, that so like for example, if you scroll up a tiny bit, that one that you have there highlighted, if this market comes up right here and it closes above that, those candles, those does that means it could be the market's chart, it breaks structure to go up, right? Or does it have to close on top of the wicks?
It's got to close it up. Like, so a really, really good sign that an order block is going to not hold is you'll see, like, you see how we got this one drawn up right here? You'll see price close inside of it. And this low of the order block will become support. And you'll see the middle, it'll become support. And then you may see the high, it'll become support. If you start seeing these things hold inside, and I'll give you a really, really good example. Like this, I actually thought it was going to sell off right here. I tried to sell. But you see how all these wicks keep coming down inside of this imbalance. And you can use, what'll happen is the market will use any bullish order block can become support for a bearish move, or vice versa. I think I said it wrong, but it can become, any bullish order block can become resistance for, well, I'm like tongue-tied, but just think of this, right? This move should have been our sell right here, because that's an order block. If I was looking for a sell, this would have been my order block to the downside, right? We had up move high, we had a shift in market structure, and then we had a new low created. So when price came back up to here, I should have been like, cool, I can sell this from here, right? And then the three areas I would have been looking at, right? High, middle, and low of this order block right here would have been 38.53, 38.34, 38.15. Those were my high, middle, and low of the order block, right? But in contrast, they put in a impulse to the upside, which created an imbalance, right?
Right.
Considerations for this imbalance right here are going to be these three levels right here: 38.21, 38 flat, 37.97, right? Right. So we push all the way up. We come up to about 38.34, which is right here. That's the imbalance that was created on the downside. Once we shift to the downside right here, and then we reject, right? We start rejecting inside of this order block. And notice where the bodies of these candles kind of hold up for the most part, right? Right around the middle, right around 38.34, right? Most of the trading volume happens right around here, around the middle. But every time we tried to sell, we pretty much came to the bottom of the order block, and look at where the new wicks are, right? This is a sign that we are going to hold, right? When you start seeing stuff like this happen, when we get into an area that's supposed to sell off and we don't, and it holds the low on the low of an order block that's on a higher time frame, that's a sign that you are going to continue. It happened over here.
Yeah, so I was gonna say, where would be your entry then if to go up?
Inside of here, you should have on the lower time frame one of these patterns. One of these patterns should be on the lower time frame. This move that we just had, look at this, right? This is our bullish imbalance right here, right? That was made with this move up right here, right? We thinking because we got to this point, we should sell. I even sold right here too. I even sold right here too. I sold from 38.89, which is right around here somewhere, right? But this higher time frame order block, lower time frame 4-hour fair value, you get this is an imbalance, right? But if I go to the, let's say 15-minute, right? The same area that we were just looking at, it look a little different, right? In this case, we doing this.
Yeah.
This is what we doing, right? And our order block looks like, this situation looks like order block here, order block here, equal highs over here, shifting market structure to the upside here. Our higher low, we kind of failing right here, but that's okay, right? That's okay, we failing right here, right? Because we still respecting these two. So now that we see what's going on, right? Shift in market structure came over here. We took this high out right here. This low is that low. This low is that low, right? That's our order block right here. And we can focus on price coming back down here. Right? Now we see what it's doing, right? And we can focus on these three areas, right? High, middle, and low on the order block. And we get further confirmation that this could be a good buy because we in a higher time frame area, this imbalance from the 4-hour, right? So if I'm on the 4-hour and I'm seeing that we are at this imbalance and we starting to reject, then I could say, all right, I'll look for a potential buy on the lower time frame if I see something like this happen, right? So you could have looked to taking the buy from, you could have looked for the same thing on the 5-minute on this candle right here too, because there's a 5-minute order block over here or 1-minute order block somewhere around here. But the clearest one is the 15. That's this order block right here. Price comes to 36.82. Look at the body right here. Most of the trading volume stops right here. Most of the selling stops at 38.82. You get a wick, but that's it. And then we shoot up. That's your buy entry right there. Remember this same thing right here on the 15-minute. We can go to the 5-minute. Same situation, right? Same look, right? What's right here? Bullish order block. You focus on these three levels. You have confirmation that you inside of a 4-hour imbalance, right? Let me delete this one. Delete that. Right? Okay. You have this last down candle. This candle takes it out over here, and we create a new high. And it's at a little small little imbalance right here. And you could consider one of these as an order block. I wouldn't, but you could. This imbalance, that's the bearish point of interest. This is actually where I sold from, right? So because I thought we were going to go down and just trade through this, right? But I also know to take profit right here too, which I did because this was an area that was a higher time frame bullish point of interest. But if I don't take the buy, I still know, hey, I got an order block, focus on 38.77, focus on 38.70, focus on 38.64. The bodies sit all around 38.71. We do get a wick down to 38.68. We can take a buy right here. We would have hit all the areas, took out all the highs, and made a new high. If we didn't catch that buy, we would even have an opportunity to come back and take it again because this low was at, you see how on the 15-minute, most of the bodies were up here, but the wick came down here. That wick came down to 38.77, right? The high on the 5-minute order block was 38.77.86. You could have got pulled in on that. That's why you see it. Like everything is fractal, right? So if you see it happening on a 4-hour, just come to the 5-minute and look for the same thing to happen. If you start seeing the reject, right, that's how you can get those sniper entries and stuff like that.
All right, I appreciate you. That helped a lot.
Yeah. So same thing we saw over here. Low, low, order block, 3 levels, right? High, lower high, or high, taken out. This one returned to the order block, right? This one immediately returned right here and held. Then we created even another little order block over here, but we don't even have to touch on that because we still had the use of this one. Then once we make this low, higher low, that's right here, we take out all of these that give you your shift in market structure. We make a high. There's your high right here. Then after we make the high, we get a return to order block down here. New higher low. We take this out and push up. Now, if we trade back inside of 39.7, that's going to be a sign that we stay in this and keep going up. So that's what I'll be looking for. We can stay in above this 39.707 price. That's going to be more so telling like, hey, this is probably going to keep going, if we close it above. And you see how it tried to right here, tried to hold it right here. Tried to hold it over here. But this the low of this order block. So it's the most sensitive area. So it's gonna have to push through that. Then the next area is around here, 27 area is the middle. 25 area is the middle. And then we'll need to see price hold up there to go here. Go ahead, shoot, Khalil.
Okay, my question is, how do you, let's start in the middle of that down. You see that high, the highest high? Yeah, if you come to the left where you got that lower high, the next one to the right. Yes, sir. To your right, the other way. To the right of that one. Well, I guess let's say to the left of that one. To the left. That lower high to the right to my right on it.
In the middle of them, there's a lower high.
This one.
Yes, sir, right there. Right.
Okay. You like your left. I don't know where your left is, right?
Yeah, I'm saying I kept saying right, but you was going left. I think, well, maybe
I
he's
don't know
looking
where
at
your
the other
left
way.
is.
All right, so that moved down and it created that fair value gap, right? So then the lower high came up and tapped the high of that fair value gap. Yes, sir, right there, and dropped, right? Okay, so then when it ran all the way up and broke the high, right? Well, even I guess, yeah, let's go to the lower low before that high. And then let's see that no. You see right here, that retracement of seemingly that order block area. Like, so kind of my question is this: once you got that drop over there, and then it came back and retested that order block high, right? You know, sometimes you would. I want to ask my question. Like, you would think that fair value gap been somewhat what you call mitigated, right? But you see how it came back and tested the top of that order block and went up. And I know sometimes you don't. I don't know. So I shouldn't say you don't trade like that, but like Alfredo sometimes talks about how that's already been kind of mitigated. But I'll leave that on sometime, and it'll come back right there and hit the top of it and go, right? And then
like,
let's say where
about right here.
Yes, sir. Right.
This is what is this though?
But it's the middle of. It's also the middle of another fair value gap. You know,
right.
Bullish fair value gap.
But at the same time, what is this though? This candle. What is this candle?
The red candle?
Yeah. It's a continuation order block. So you could take this and buy it right here because this is an attempt for this to continue. Like, you got every situation that I just mentioned earlier happening right here at this candle. You got a high, a low, order block. The high get taken out right here. A new high get created. It comes back down into it. It takes this high out and makes a new high. It's the same thing all the way over.
Right, but like
smaller scale.
But you wouldn't. Well, the reason I would. Well, how would you know to get in there? You know, because it's not a continuation order block until that blue candle goes up and close. Correct.
This one right here.
Right, but I'm talking about at that red candle when it came down and touched. You know how you share with me, and I still use that. And it still works like butter. You know, when it touches that order block, even if you're wrong, you'll get a, you know, especially on US 30, you'll get a 50-point move, right? In this case, it continued all the way up. So I guess what I'm saying is I still respect those areas once price have gone through them, because sometimes it comes back like that particular one on the reverse side, even though this one created its own fair value gap that you could actually say, well, you traded it, you know, the middle or the 50% of the fair value gap or close to it. But it's also at that area to the left. So that's kind of not a good example because that fair value gap is there, and that's, I understand how it could stop and continue. But sometimes it'll just blow through, but it'll come back and still sit at that area where that previous high and order block was. You know?
It will. This is just like, I wouldn't take this because I know like this is what we're going into. It's like buying into, like, you know, like, I'm not going to jump in a car that's getting ready to drive into a brick wall.
Right.
You know what I'm saying? Like, this is a brick wall right here. I see the brick wall. I'm not just going to jump in a car and just crash on in it. I might get in the car down here and, you know, cross the line at some point and get up out of here. But I know that, like, this is low probability, you know. Now, if you're taking a breakout trade, you could take this you know, this be your stop loss right here. You put your buy order above this high, and then you just buy it, you know. If you taking a breakout setup, then yeah, I could see you doing that, you know, but it still give you the same setup, right?
Yeah.
So still give you the same setup we mentioned over here.
So I guess my real question is, now it's kind of developed, is that once price kind of mitigates the fair value gap and or order block, you kind of ignore it and move on to the next one.
Always.
Okay, yeah. I just wanted to put that out there and ask again, kind of confirm, because I've actually shifted that to do that, and it has been working so much better. I take less losses at that.
Yeah.
But I never had a real clear answer, you know, about it.
As long as like I trade from 7 a.m. to 12. Whatever happens in between there, that's what I trade. And if I only take 1 or 2 setups and I might miss something else, I don't think about it, because during that time, that's what was offered to me. At the time that I was in the market, I was offered a position that was near a bearish point of interest, right? So what is this setup? Was here. I sold near the daily, right? I was inside of this imbalance that I saw that it made, right? Oops. During the time I was in the market, this is where I was selling, right? I even added on down here, right? This was a bearish point of interest. We had already sold down here, create a new low, shift in market structure, come back up, sell. That's in line with this model right here. That's in line with this model. Let me put it on the screen. That's in line with this model, right? Shift in market structure, order block, imbalance. That's my imbalance. Made a new low. That's my new low. It came back up into the imbalance or the order block, rejected right here. That's my new lower high. That's my new lower high. Goal is to sell off and take this low out right here. We didn't take the low out. But why we didn't take the low out is because this blue shaded area is a 4-hour imbalance area, which I already knew in the back of my head, this could have been a buy area, right? And I already had determined when I went through my checklist that this could potentially buy here, but what was offered to me at this time was this sale right here. And this sale ended up being from where I sold it from, 89 to here, ended up being 200 pips. And I had 2 orders on over here. So really I ended up making 400 pips. Dude, I don't need no more pips after that. Well, not on a Friday, not on a Friday, you know. And if my overall bias is that it's going to sell and we at highs, I'm not going to probably go aggressively into this buy, even though it did buy. So, yeah, I think it is an overall bearish market, but this is an area that I'm looking at because of what's going on fundamentally that it could continue to buy. So could I have taken this buy? Yeah, I had a chance here and here. But at 1, I'm already done trading, especially on Fridays. On Fridays, I get in the market from 7 to 12 on Fridays, on every day, right? And on Fridays, if it ain't happened by 11:30, I don't take no trades. I don't care what the market does after that, because I don't want to get myself and take a big loss on a Friday afternoon. And, you know, when I didn't even have to take that loss, you know, especially if I already made something between 7 and 12, you know.
Oh yeah, I'm still on this call, but it's all good.
Oh, yeah.
Sorry, I'm mute this, brother.
Yeah. So yeah, like I said, fam, like I just on Fridays I don't play around. Like I don't want to lose nothing I made during the week. But anyway, so
Wait, why is that your rule?
because I just made a bunch of money during the week, why I'm gonna come in on Friday and blow it?
Also, that's only if you make a lot of money during the
If I
week.
make if I made a lot of money during the week, or if I didn't make a lot of money, why would I take a bigger loss? Why would I take a loss when I'm already down? It ain't like I'm gonna make up all my money back on Friday. Just save it for next week, you know? Like if my goal for the week is 10% a week, right? And I'm only at 3% that I made this week, I ain't about to go and try to make 7% on a Friday, you know? Or if I'm at 9% and my goal is 10%, I'm gonna risk a 0.5% to try to get the rest of it, but I ain't going to like go in and try to risk more than that 1%. If all I need to make is 1%, I'm gonna try to do it with a lower percentage to get the same 1%. Maybe I'm gonna risk, if I only got 1% left, maybe I'm gonna break that down to a quarter of that and risk a quarter of that to try to get 1% off the quarter of that, you know? So that way I never like take a huge loss on a Friday. I try not to anyway. Because I noticed that myself, like some of the dumbest stuff that I've done has been on a Friday. So.
Cool, thanks, Corey.
Cool.
Sorry for that interruption.
No, it's all good. Just threw me off.
Hey, Corey.
Yep.
If you find an indicator on TradingView, right, and it has no information by it, how do you find the information about that indicator?
You just research it. Investopedia is usually a good one. Investopedia, even like if it's a commonly used indicator, like RSI.
Hold on one second. Let me look at TradingView right quick. And it
Yeah.
says, oh Jesus.
Like
I'm
RSI
sorry.
is something they use all the time. So if you don't see it on TradingView.
You said what now?
I said if you don't see it on TradingView, Investopedia might have it. But if it's a custom indicator that somebody built, then you just gotta deal with it.
I don't know if it's called Super Trend Strategy 10-3. Super Trend Strategy, then the number 10, and then spaced out is the number 3.
Tell Donovan to be quiet, you know. Now,
He started laughing.
Is it one of these? Because I don't. Super Trend Strategy, what?
The number 10 and then space the number 3. Okay, well, see, that's what keeps happening to me, but I know that this is what this indicator says it's called. But I can't find it again, but it is on my chart.
All these got notes.
But the one that I have didn't have a note by it.
Send me a screenshot.
Will they do it from my phone?
I guess. Oh, I don't know.
Okay.
Yeah, I don't know. I would just suggest you open it up like this and maybe it's gonna show. It sounds like it's a custom indicator though. Yeah, sound custom. So, all right. If no more questions, I will close this out and send this to you guys. Like I said, if you're not following me, just drop your like or shares, whatever, like or subscribe. And then let me stop sharing. I think that we done, right? We done, right?